3 days ago, something happened in the silver market that changed everything. And in exactly a few hours from now, at 6 p.m. New York time tonight, Monday, January 5th, 2026, we're going to find out if the global financial system is ready for what comes next. Right now, there's a $10 gap between what silver costs in Shanghai and what it costs in New York. Under normal conditions, that gap would disappear in hours. Traders would buy cheap, ship east, and pocket the difference. But the gap isn't closing. In fact, it's getting worse. And the reason why should terrify anyone who owns a phone, drives an electric car, or expects the lights to stay on. Because what I'm about to show you isn't speculation. It's not a theory. It's happening right now in vault records, shipping manifests, and exchange data that anyone can verify. Stay with me for the next few minutes, and I will show you exactly what's unfolding in the silver market, and why the next 72 hours could determine the price of this metal for the next decade. Let's get into it. All right, here's what you need to understand first. On January 1st, 2026, just 4 days ago, China officially flipped the switch on the most aggressive silver export restrictions the world has seen in modern history. They didn't announce a ban. They did something far more strategic. China implemented a licensing framework that looks reasonable on paper, but is devastating in practice. If you want to export silver from China now, you need to be a state-approved enterprise. You need annual production of at least 80 tons. You need export records going back to 2022. You need ISO certifications. Only 44 companies made the approved list for 2026 and 2027. Hundreds of small and mid-sized exporters who've been supplying Western markets for years. Locked out. Overnight. Now, here's why this matters more than you think. China doesn't just produce silver. They control between 60 and 70% of the world's refined silver supply. Even silver mined in other countries often gets processed in Chinese refineries before it reaches global markets. So when China restricts exports, they're not just limiting their own production, they're potentially choking off the majority of the world's refined silver supply, period. The Securities Times, a Chinese state-run publication, quoted an industry insider who said this policy formally elevates silver from an ordinary commodity to a strategic material, placing its export controls on the same regulatory footing as rare earths. That's not subtle. That's China explicitly telling the world, we control this, and we're treating it like a weapon. And Elon Musk himself weighed in. When the news broke, he posted on X, this is not good. Silver is needed in many industrial processes. He's right, and the markets are starting to figure that out. But here's where this gets really interesting and really concerning. Let me show you what happened at Comex in December. These are the numbers that should be making headlines everywhere. Comex is the primary precious metals exchange in the United States. It's where industrial users, investors, and traders come to buy and sell silver futures contracts. And inside Comex warehouses, there's something called registered silver, metal that's immediately available for delivery against those futures contracts. Since 2020, registered silver at Comex has dropped by over 70%. But in December 2025, something unprecedented happened. In just the first 4 trading days of the month, over 47.6 million ounces of silver were claimed for delivery. That's more than 60% of all registered inventory, gone in 4 days. Some analysts called it a vault drain emergency. Others said the term was overblown. But here's what nobody disputes. The numbers are real. The metal left the vaults. And it happened faster than anyone expected. Now, normally, when you see that kind of drawdown, prices should spike immediately. Supply and demand, right? Less metal available means higher prices, but look what actually happened. Silver briefly touched above $80 in late December, then pulled back to around $71 to $72 on profit-taking and index rebalancing. The market behaved like everything was normal, except nothing about this is normal. Because while Comex was trading silver at $71 to $72, physical silver in Shanghai was changing hands at $78 to $80 per ounce. That's an $8 to $10 premium just for physical delivery in Asia. And that premium has been sitting there for weeks. Now, if you've ever taken an economics class, you know what should happen next. It's called arbitrage. Traders should be buying silver cheap in New York at $71, shipping it to Shanghai, and selling it for $80. That's a guaranteed $9 profit per ounce. In a functioning market, arbitrage traders would close that gap within days, maybe hours. But the gap isn't closing. Why? Because there isn't enough physical silver to move. The metal that's supposed to be available at Comex, it's either already claimed, allocated to ETFs held by industrial users who aren't selling, or simply locked in positions that can't be easily unwound. The logistics of actually getting physical silver, insuring it, shipping it across the Pacific, and delivering it into Shanghai are breaking down under the strain of demand that nobody anticipated. This is what some analysts call the paper versus physical divergence. On paper, in the futures market, silver trades at one price. But if you actually want to hold physical metal in your hand, especially in Asia, you're paying a completely different price. And it gets worse. The London Bullion Market Association, the primary physical trading hub for precious metals globally, has seen its own crisis unfold. In October 2025, an order for just 1,000 tons of silver from India reportedly triggered a freeze in the London market. Silver lease rates, the cost of borrowing a physical metal, spiked from near 0 to 200% in a matter of hours. Think about that. London vaults hold roughly 844 million ounces of silver, according to LBMA data. Yet the market apparently couldn't handle a 1,000-ton delivery request without seizing up. Why? Because the free float, the silver actually available for new trading, is much smaller than the headline numbers suggest. Much of that metal is spoken for, allocated, or otherwise committed. And now China has closed the relief valve. Now, let me tell you why this matters, even if you don't own a single ounce of silver. Silver isn't just something people hoard in their basements. It's in the device you're watching this video on right now. It's in solar panels, electric vehicles, medical equipment, 5G towers, and AI data centers. And demand is exploding. Start with solar energy. Silver is essential for photovoltaic cells. It's the conductive layer that captures and transports electrons generated by sunlight. Without silver, solar panels don't work efficiently. There's no practical substitute that offers the same conductivity. In 2025, the world added 380 gigawatts of new solar capacity just in the first half of the year. That's a 64% increase from the prior year. Each gigawatt requires roughly 1.9 million solar panels. Each panel contains about 0.64 ounces of silver. Do the math. That's approximately 448 million ounces of silver demand from solar installations in just 6 months. And it's accelerating. China installed more solar panels in the first half of 2025 than the rest of the world combined. The Silver Institute projects that photovoltaic demand could exceed 300 million ounces annually by 2030. Next, electric vehicles. EVs use 25 to 50 grams of silver per vehicle compared to maybe 15 grams for traditional cars. That's 67 to 79% more silver per vehicle. Gartner forecasts that the total number of EVs on roads globally will rise by 30% in 2026 alone, reaching 116 million vehicles. And if Samsung's solid-state battery technology becomes standard, each EV could require a kilogram or more of silver. That would completely reshape demand. Third, artificial intelligence and data centers. The Silver Institute estimates that global IT power capacity has increased roughly 53-fold since 2000. From under 1 gigawatt to nearly 50 gigawatts in 2025. Every server, every circuit board, every connection point uses silver for its unmatched electrical conductivity. And AI data centers are particularly power hungry. Put it all together, and industrial silver demand hit a record high of 680.5 million ounces in 2024, 11% higher than the previous year. Meanwhile, total mine production has been stuck around 813 to 820 million ounces annually. And here's the kicker. About 71% of silver comes as a byproduct of mining for other metals like lead, zinc, copper, and gold. That means even if silver prices double, miners can't easily increase supply because they're not primarily mining for silver. Their operations are driven by base metal economics. For 5 consecutive years now, global demand has exceeded supply. The cumulative deficit from 2021 through 2025 is estimated at nearly 820 million ounces. That's not a gap that closes easily. And China's export restrictions just made it exponentially worse. So what do the experts think happens next? Bank of America raised its silver price target to $65 per ounce for 2026, with an average around $56. UBS increased forecasts to $60 with the possibility of a spike to $65. Goldman Sachs has been bullish on precious metals overall, with support for further gains in silver. But some analysts are far more aggressive. BNP Paribas has suggested silver could climb as high as $100 per ounce by late 2026 if inflation and geopolitical risks remain elevated. Technical analyst Michael Oliver has discussed the potential for triple-digit silver prices if current trends persist. There are cautious voices too. TD Securities warned that massive index rebalancing in early January could create selling pressure. The Bloomberg Commodities Index is adjusting its weightings, requiring the sale of roughly $5 billion in silver futures over a 2-week period. They wrote, "We expect a massive 13% of aggregate open interest in Comex silver markets will be sold over the coming 2 weeks. That could create volatility. After a 148% gain in 2025, silver's best year since 1979, some profit-taking is inevitable. But here's what's notable. Even the cautious analysts aren't calling for silver to return to pre-2025 levels. The supply deficit is too real. China's restrictions are too significant, the consensus view seems to be that silver will remain elevated in 2026, supported by structural factors, but that the ride will be volatile, two-way price action rather than a straight lineup. Mainstream institutional forecasts cluster around $55 to $80 for average prices in 2026. More aggressive predictions range from 100 to 150 or higher. Let me step back for a moment and talk about what we're really witnessing here. What's happening in silver isn't happening in isolation. It's part of a broader shift in how the world thinks about critical materials. For decades, the global economic model assumed that commodities would flow freely across borders. Supply chains stretched across continents with minimal friction. If you needed something, you could buy it at market prices. That model is breaking down. China has systematically built leverage over critical materials: rare earths, tungsten, antimony, gallium, germanium, and now silver. Each of these is essential for modern technology, and China controls dominant positions in production, refining, or both. The silver export restrictions announced in late 2025 aren't an isolated policy. They're part of a coordinated resource nationalism strategy that China has been implementing for years. The US and Europe are scrambling to respond. In November 2025, silver was officially added to America's list of critical minerals. Efforts to promote domestic mining and build alternative supply chains are underway. But these initiatives take time. New mines don't get built overnight. Refining capacity takes years to develop. Meanwhile, the technologies that require silver are only becoming more important. The energy transition depends on solar panels. The transportation revolution depends on electric vehicles. The AI revolution depends on data centers. These aren't optional developments. They're the foundation of economic competitiveness for decades to come. Countries that can't secure reliable supplies of critical materials will fall behind. So when you look at silver, you're not just looking at a commodity price on a screen. You're looking at a choke point in global industrial supply chains, and the market is starting to price that in. All right, let's bring this home. Here's what we know as fact as markets prepare to open tonight at 6 p.m. New York time. China's export licensing requirements took effect on January 1st, restricting access to 60 to 70% of the global refined silver supply. The silver market has been in deficit for 5 consecutive years, with 2025 demand exceeding supply by an estimated 230 million ounces. Comex registered inventories have fallen 70% since 2020, with over 60% of remaining inventory claimed in just 4 days last month. Physical silver in Shanghai trades at $8 to $10 premiums over Western futures, and the arbitrage isn't closing. Industrial demand from solar, EVs, and AI continues to surge, while mine production remains flat. Those are the facts. You can verify every single one. Now here's what I think, and this is just my view. I think we're watching a historic repricing event unfold in real time. The combination of structural deficits, surging demand, and deliberate supply restrictions by the dominant producer creates conditions we haven't seen before. Does that mean silver goes straight up from here? No. There will be volatility. The index rebalancing could create near-term selling pressure. Overbought technical conditions invite corrections. But the underlying fundamentals haven't changed. If anything, China's restrictions have made them more acute. What should you do with this information? That's not for me to say. I'm not your financial advisor. I don't know your situation, your goals, or your risk tolerance. What I will say is this: pay attention. Whether you own silver or not, what happens in this market matters. It affects energy costs, transportation, technology, and the broader dynamics of great power competition. We're in a new era of resource nationalism. Critical materials are being weaponized. The assumptions that defined global commerce for decades are being challenged, and silver is at the center of it. I'll be watching tonight's open very closely. If something significant develops, I'll update you immediately. If you found this breakdown valuable, hit that subscribe button. I break down complex market dynamics without the hype and without the fear-mongering, just honest analysis of what the data shows. Drop a comment below with your thoughts. Do you think we're heading for triple-digit silver, or is this rally running out of steam? I read every comment. The next 72 hours could be critical, and I'll be here to cover every move. Thanks for watching. I'll see you in the next one.